Grow your money. Investing is one of the most effective ways to build your wealth over time. By putting your money into various investment vehicles, you can potentially earn returns that outpace inflation and increase your financial security. Have you ever wished your money could work harder for you? Imagine if every dollar you saved had the potential to grow and multiply. That's the power of investing. It allows your money to generate more money, creating a cycle of growth and prosperity. That's what investing is all about. It's about making your money work for you rather than just sitting idle. By investing, you can take advantage of the growth potential of various assets such as stocks, bonds, and real estate. It's like planting a seed that grows into a mighty tree. Just as a tree takes time to grow, so does your investment. But with patience and the right strategy, your small initial investment can grow into a substantial sum. Instead of keeping your money sitting in a savings account, investing puts it to work in the stock market. Savings accounts offer minimal interest rates, often not enough to keep up with inflation. Investing, on the other hand, offers the potential for much higher returns. When you invest, you buy a small piece of a company, called a stock. This means you own a part of that company and can benefit from its growth and success. Stocks are just one type of investment. There are many others, including bonds, mutual funds, and ETFs. As that company grows and becomes more valuable, so does your investment. The value of your stock can increase, and you may also receive dividends, which are a portion of the company's profits distributed to shareholders. This helps you build wealth over time, even while you sleep. The beauty of investing is that it can generate passive income, meaning you earn money without having to actively work for it. Your investments can grow in value and provide you with financial security and freedom. Investing isn't just for the wealthy, it's for everyone who wants to achieve their financial goals. No matter your income level, you can start investing with small amounts and gradually increase your investments as you become more comfortable and knowledgeable. Whether it's saving for retirement, a down payment on a house, or your children's education, investing can help you get there faster. By setting clear financial goals and creating an investment plan, you can work towards achieving your dreams and securing your future. It's like giving your money a superpower to multiply and grow. With the right knowledge and strategy, investing can transform your financial situation and help you achieve the life you desire. So why wait? Start investing today and watch your money grow. Imagine owning a tiny piece of your favorite company. That's what a stock is. When you buy a stock, you become a shareholder, a part owner of that company. You share in its successes, and yes, sometimes its challenges too. But here's the exciting part. As the company grows and profits, the value of your stock usually increases. This means your initial investment can potentially grow significantly over time. Think about companies like Apple, Amazon, or Tesla. Their stocks have soared in value because they've created innovative products and services that people love. When you own stocks, you're not just an observer. You're a participant in the exciting world of business. Now, where does all the buying and selling of these stocks happen? Enter the stock market. Think of it as a giant online marketplace where buyers and sellers come together to trade stocks. Don't let the word market intimidate you. It's simply a platform where companies offer their stocks to the public, and investors like you can buy and sell them. The price of a stock fluctuates throughout the day based on supply and demand. When more people want to buy a stock, the price goes up. When more people want to sell, the price goes down. It's a dynamic and exciting world, but remember, investing is a marathon, not a sprint. Section 4. Getting started, your step-by-step guide. Ready to dive into the world of investing? It's an exciting journey that can lead to financial independence and security. It's easier than you think. With the right guidance and a clear plan, anyone can start investing and build a solid financial future. Here's a simple step-by-step guide to get you started on your investment journey. First, set your financial goals. This is a crucial step because it gives you a clear direction and purpose for your investments. What are you saving for? Identifying your goals will help you stay focused and motivated. Retirement, a down payment on a house, maybe a dream vacation or your child's education. Knowing your goals will help you determine how much to invest and for how long. It will also guide your investment choices. Next, open a brokerage account. This is your gateway to the stock market and other investment opportunities. This is like your online investing account. It's where you'll buy, sell, and manage your investments. There are many reputable brokerage firms to choose from, each offering different features and benefits. So do your research and find one that fits your needs. Look for low fees, good customer service, and a user-friendly platform. Then, fund your account. Once you've opened your account, you'll need to deposit money into it. This is the capital you'll use to start investing. It's time to deposit money. You can transfer funds from your bank account or deposit a check. You can start small and add more over time. Consistency is key, so consider setting up automatic transfers to your brokerage account. Finally, start investing. Now comes the exciting part. With your goals set and your account funded, you're ready to start investing. Choose the stocks you want to invest in. Research companies, look at their financial health, and consider their growth potential. Place your trades through your brokerage account. It's a straightforward process, but take your time to understand each step. Remember, investing involves risk, so start small and gradually increase your investments as you gain confidence. Diversify your portfolio to spread risk and maximize potential returns. With patience and persistence, you'll see your investments grow over time. Happy investing. Section 5. Choosing your investments. Finding the right stocks for you. With thousands of stocks to choose from, how do you know which ones are right for you? The stock market can seem like a vast ocean, filled with endless possibilities and potential pitfalls. Don't worry, it's not as overwhelming as it seems. By breaking down the process into manageable steps, you can make informed decisions that align with your financial goals. First, consider your risk tolerance. This is a crucial factor in determining which stocks are suitable for you. Are you comfortable with potentially higher returns, but also higher fluctuations in your investment? High-risk stocks can offer substantial rewards, but they come with increased volatility. Or do you prefer more stable investments with moderate growth? These stocks may not offer the same high returns, but they provide a steadier, more predictable performance. Next, think about your investment timeline. Your time horizon plays a significant role in your investment strategy. If you're investing for retirement, you have a longer time horizon, allowing you to ride out market ups and downs. This means you can afford to take on more risk for potentially higher returns. For shorter-term goals, you might consider less volatile investments. These options provide more stability and are less likely to be affected by market fluctuations. Research different companies and industries that interest you. Understanding the sectors you're investing in can give you an edge. Look at their financial performance, growth potential, and management team. A strong management team can make a significant difference in a company's success. And remember, diversification is key. Spreading your investments helps mitigate risk. Don't put all your eggs in one basket. Diversification can protect your portfolio from significant losses. Spread your investments across different companies and sectors to reduce risk. By diversifying, you ensure that the poor performance of one stock doesn't drastically impact your overall portfolio. Section 6. Avoiding common mistakes. Tips for smart investing. Even seasoned investors make mistakes, but you can avoid some common pitfalls by following these tips. First, don't invest money you can't afford to lose. Investing always carries risk. Only invest money you don't need for essential expenses. Next, avoid emotional decision-making. Don't let fear or greed drive your investment choices. Stick to your plan and make rational decisions based on your goals and risk tolerance. Also, don't try to time the market. It's nearly impossible to consistently predict market highs and lows. Instead, focus on long-term growth and ride out short-term fluctuations. And finally, do your research. Don't invest blindly based on tips or rumors. Take the time to understand the companies you're investing in and their potential for growth.